If you're worried that a poor credit record is going to scupper your chances of getting a mortgage, stay tuned. I'm Bryn Lucas, and today I'm going to be sharing property guru Phil Spencer's expert advice for bagging a mortgage, even when your credit score is low. The first thing you need to do is to find out where you stand right now. Head over to moveiq.co.uk and search Check Your Credit Score. You'll get an instant free credit check, which will give you an idea of how lenders may view you. And make sure you subscribe to this channel. We've got money saving hacks and more for home buyers uploaded every single week. So let's start with that credit check and why it matters. Your credit score is based on your borrowing history, which is one of the main things lenders look at to help them decide if you're a good bet to lend money to. The higher your score, the better your chances of borrowing money at the best rates. But even if your number is low, don't despair. It's based on your financial behavior, so you have the power to shift those numbers upwards. I'm going to explain how and what your options are for getting a mortgage now and in the future. When you apply for a mortgage, it's the lender's job to assess whether you're a good risk, considering you and the property itself. They'll look at everything from proof of employment to debt and your credit record. This shows information from the past 6 years, including all loans and credit cards. Bad credit is often down to things like missed payments, too much debt, county court judgments, or bankruptcy. So it's important that you check your credit score before the lenders do, because here's the reality. Getting a mortgage with bad credit history can be difficult. You'll have a smaller pool of lenders to choose from. You may well be offered more expensive mortgage deals with higher interest rates and fees, and you'll probably need a much larger deposit. Think up to 25% of the purchase price. Not surprisingly, lenders are far less likely to hand out 95% mortgages to people with a poor credit history. You may well be asking yourself, is it even worth applying for a mortgage if you have a poor credit rating? Well, there are deals out there and specialist lenders who offer mortgages specifically designed for those with bad credit, known as adverse credit or subprime mortgages. It's worth going through a mortgage advisor to help you to look for these. On the other hand, if you can wait, you should be able to improve your credit score, save more for a deposit, and get a better deal. Here are some MoveIQ top tips. First, check your records. Incorrect information might be on your file and you can have this removed. Hold off applying for any more credit cards or loans. Make sure you pay all your bills on time. Utility bills, rent, mobile phone, everything. Setting up direct debits can help if you've missed payments in the past, simply by forgetting, and these will help show a strong record of regular payments. Keep your name and address on all your bills up to date. Close any inactive accounts such as old credit cards or paid off loans. Manage your credit card carefully so you don't go over your limit or fail to make minimum payments, and avoid going overdrawn. If you're buying with someone else, make sure they do all these things too, as their score will affect your joint mortgage application. When you do apply for a mortgage, be honest and upfront, as a lender will do a thorough investigation. If you try and hide anything, that will only make you less likely to get approved. Instead, be prepared with an explanation as to why you're in financial trouble. If you can present evidence in the form of statements and records of how you've got yourself out of it, that will give you some leverage. If your mortgage application is declined, avoid the temptation to rush into applying for another. Wait a few months at least, because multiple applications rejected in a short space of time can make future lenders less likely to approve you. Lenders like to see evidence of a steady income for at least 6 months. So if you're self-employed, get an SA 302 form to provide evidence of your earnings. There's no getting around the hard fact that a poor credit score is a disadvantage for home buyers, but we hope this has given you a head start on getting that number up and whether now is the right time for applying for a mortgage. You can find out more about this and much more on the MoveIQ website, so head over there for a browse, and don't forget to subscribe here too. I'll see you next time.